Now, I'm a huge fan of Realty Income stock, ticker symbol low, and maybe the biggest fan ever. I mean, Realty Income stock was one of the first ever dividend stocks I purchased for my long-term portfolio going on almost a decade ago, and as of right now across my entire portfolio, I currently own over 2,800 shares. Now, I love Realty Income because I personally have an affinity to high-quality real estate, and by buying into shares of Realty Income, I get instant exposure to high-quality real estate one share at a time. Now, I also love Realty Income because as of right now, this single REIT pays me north of $700 per month every single month, and that number has only been growing as of recently. So even though I do love Realty Income, there is a different real estate investment trust asset that I've been stacking more and more shares of in my portfolio as of recently, and this new asset is quickly becoming one of my favorites, and that's even compared to my all-time favorite REIT, Realty Income. This real estate investment trust ETF not only yields almost double that of Realty Income, which already yields a high amount, but also it offers a ton of diversification and is even tax efficient. So I promise you, if you like real estate investment trust and if you love consistent monthly dividend income, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey, and my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, some of you guys might have guessed it, but as of recently, I have been slowing down on my Realty Income purchases, which I have been making more or less over the last decade, but now I've been buying a lot more of this brand new ETF, the NEOS Real Estate High Income ETF, or ticker symbol IYRI. Now, the fact that this ETF came out as of recently is very interesting because this ETF almost offers exactly what I personally am looking for as an investor. Now, that being, I want exposure to high quality real estate. Like I said, I do have an affinity for high quality real estate, and I do want to add as much of that as possible to my long-term portfolio. But along with that, this ETF specifically not only offers you exposure to super high quality names, which we're going to talk about here in a second, but also utilizes a covered call strategy in order to earn a ton of income, which as of right now is just shy of 12% distribution rate. Now, Realty Income is currently yielding almost 6%, which is still insanely high, but this ETF, because of the high income strategy, which we're going to talk about, offers almost double that. Now, to dig a little bit deeper into this new NEOS ETF strategy, it says targeted benefits of IYRIS. Number one, the fund seeks to distribute high levels of monthly income through a data-driven call option strategy on ETFs that seek to track the Dow Jones US Real Estate Capped Index. So obviously there's absolutely no way in the world that this ETF could just buy into single names, single REITs, even if they're relatively high yield, and generate upwards of 12% distribution rate. This is going to have to include a call option strategy, which is amazing because call option strategies not only offer the potential for a lot more income generation, but along with that can also sometimes help with downside exposure. Now, number two, it says actively managed by NEOS, one of my favorite fund providers. The fund seeks to offer upside potential in addition to the primary objective of high monthly income. Now, like I always say, you need to understand what the ETF you're interested in buying into is offering you. And if you go to any ETF's website, it says it very, very obviously. This ETF is primarily looking for high income generation, but along with it is offering upside potential. So again, this ETF is not a growth ETF. I mean, it says high income in its name after all. But even though it's offering you a ton of income generation, potentially, it's also going to offer you some upside potential, which is a bonus. Now, number three, the fund may offer efficient exposure to a portfolio of US listed REITs with an enhanced layer of high monthly income potential packaged into a single ETF. Now, if you've been watching me for a while, you know that I take some of my Realty Income shares. I mean, I almost own 3,000 shares, and I actually sell covered calls on my shares individually. Now, I've been doing that for a long time, and the fact that Realty Income has mostly been trading sideways has allowed me to generate a ton of premium over the last several years, even during a time where the REIT has not really done anything at all. Now, that's partially why this ETF really sparked my interest, is because it's basically offering a strategy that I'm actually doing right now on my own, but doing it for me. Now, the expense ratio for this ETF is 0.68%, so sort of what we're going to be expecting for an actively managed ETF like this. Now, the investment objective, it says right here, the NEOS Real Estate High Income ETF, the fund seeks to generate high monthly income with the potential for equity appreciation, which is awesome. Now, net assets for this ETF so far, just over 23 million, but again, it's only been trading for a few months. Now, before we go through the holdings of this ETF as of right now, and I share with you guys also why this ETF really sparked my interest and why I've been buying more and more shares of it as of recently over buying shares of Realty Income, the last few payouts, at least so far, again, we can't necessarily expect this every single month, but so far we have almost 51 cents as of recent and 50 cents the first payout, which again is giving us a distribution rate of around 12%, which is massive. There's absolutely no REITs across the market that I personally like, that I personally feel comfortable with, that are yielding anywhere near this, which is why this ETF, because of its strategy, you're getting exposure to high quality names, which I'm going to share with you in a second, but also exposure to a high amount of income. Now, looking through some of the top holdings, we have Prologis, we have American Tower Corporation, one of my favorites. We have Equinix, we have Welltower, Realty Income, of course, Simon Property Group, Public Storage. I mean, I own several of these names on their own and have been owning them for several years. And I would say I'm more or less a huge fan of all these names. Again, super high quality REITs in a sector where there isn't always as much quality compared to others. Now, like I was saying earlier, if you wanted to go ahead and buy into super high quality names, sort of high beta names like American Tower, for example, a REIT, a cell tower REIT that I've bought in and out of over the past several years, and I honestly like a lot. You're not going to get that much yield whatsoever. You're probably going to get like 2 or 3% yield. But because of that covered call strategy, you are getting so much more income generation than you would get if you just bought into the holdings on their own. Now, the NEOS ETFs overall are sort of known to be tax efficient, or at least attempting to be, in my opinion. And the NEOS Real Estate High Income ETF, at least so far, is no different. It says right here, in connection with the monthly dividend payments of 0.5005 cents per share payable, and this was on January 24th, 2025 to shareholders, record date, etc., etc. It is anticipated that 100% of such dividend will be a return of capital. And then it breaks down exactly how this is all going to look. But guys, these payouts could potentially be 100% return of capital, which could be massive. Now you might be asking, well, what in the world is return of capital? Don't worry, I got you. Return of capital is a payment that an investor receives as a portion of the original investment, and that is not considered income or capital gains from that investment. Note that a return of capital reduces an investor's adjusted cost basis. Once the stock's adjusted cost basis has been reduced to zero, any subsequent return will be taxable as capital gains. So basically, they're just returning you a little piece of the investment that you gave them, and you're not going to be taxed on it whatsoever until you sell your shares, or of course, until your shares are 100% paid back. So for all those reasons and more, I've been adding more and more shares of this ETF into my portfolio as of recently, again, gaining exposure to a ton of income potential from day one, even a lot more income potential than my favorite REIT across the entire market, known as Realty Income. Now, if real estate investment trusts do dip in the market, I'll probably go in and start buying 100 or 200 shares of this one and really load up on a position. But as of right now, real estate investment trusts are holding up pretty good. So I've just been nibbling, buying a share or two here and there. So now that we talked about the NEOS Real Estate High Income ETF, I share with you guys why I like it and why I personally have been buying more shares of this one compared to Realty Income. And lastly, most importantly, want to hear from you guys down below. When it comes to the NEOS Real Estate High Income ETF, is this an ETF that you personally would buy in your portfolio? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.